Ladies and gentlemen, good day and welcome to Heidelbergcement India Limited's earnings conference call for quarter and year ended 31st March 2024, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited. Thank you, and over to you, sir.
Yeah, thank you, Michelle. Good afternoon, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the earnings call for quarter and year ended 31st March 2024 of Heidelbergcement India Limited. On the call, we have with us Mr. Joydeep Mukherjee, Managing Director, and Mr. Anil Sharma, Chief Financial Officer of Heidelbergcement India Limited. I would like to mention on behalf of Heidelbergcement India Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments and based on the current expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause actual developments and results to differ materially from the statements made. Heidelbergcement India Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, Heidelbergcement India Limited has uploaded a copy of the FY2024 investor presentation on their website and stock exchanges. Participants are requested to download a copy of the presentation from these websites. I will now hand over the floor to the management of Heidelbergcement India Limited for opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, Joydeep, sir.
Okay, thank you so much, Vaibhav. So on our key messages for 2024, which is a year past, the messages are that we are still continuing to produce 100% blended cement in our operations. We have signed a long-term hybrid PPA for 8 megawatt wind and 8 megawatt solar for 37 gigawatt hours per annum. Our share of non-grid power has increased to 38%. Our EBITDA of 659 rupees per ton is up by 16% year on year. We have recently announced a debottlenecking of clinker capacity, which should result in an increased cement output of 200,000 tons. We have repaid interest-free loan of 629 million rupees. Our cash and bank balance exceed the borrowings right now, and we continue to operate on a negative net operating working capital. We have recently announced post the board meeting a dividend of 8 rupees per share. Okay, so if we go on to the ESG overview, as I mentioned earlier, we are at 100% blended cement. Our CO2 footprint is currently at 506 kgs per ton of cement. We are 4.4 times water positive. As far as our CSR outreach programs are concerned, we touch more than 20,000 lives, and our green power is at 1/3 of our total power consumption. On the new hybrid renewable energy projects, we are very bullish on that, and it will further increase our green power share. In Jhansi, the solar power supply started under long-term solar agreement for 22 gigawatt hours per annum. Narsingar is constantly and consistently operating on 40% green power. Narsingar and Inlai, we have signed a long-term hybrid PPA for 8 megawatt wind and 8 megawatt solar, as we talked about before. And Amasans are consistently operating at more than 90%. Our target is to reach more than 40% green power by FY25. For the financial year 24, we had a 9% volume growth, and the March quarter over March quarter grew by 4%. Our increase in profitability is fundamentally driven by decrease in input costs. And obviously, the decrease in power and fuel price, we were not able to get the full benefit out of it because there were also a corresponding decrease in prices in the market. April 23 to March 24 EBITDA increased mainly due to decrease in power and fuel costs, as I mentioned before. We continue to operate on negative working capital exceeding 2 billion INR. And I think the rest of the points have been covered, except to say that we added a value-added product, which is Power Shield in December 24. This is a functionally different cement. It's been accepted very well in the market. We are already up to more than 8,000 tons of sales per month. This will result in premiumization of our brands, and we are now opening up our new markets for this product. For the financial year past, we dispatched 44% of our total products by road. This is slightly gone down by 2.8% year on year, because we've also started addressing some new markets which are a little further from our plants but are profitable. We are operating at 8% AFR, which is up by 2.3% year on year. On our total sales mix, 34% is of trade volume. We are up with premium products, which is up by 2.6% year on year, which is Power and Power Shield. And on our sales composition, 82% of our total sales is through the retail channel, which is up by 0.6% year on year. We are constantly increasing premiumization and optimizing the appropriate mix. On the outlook, we would say that there are some positives and obviously some challenges. On the positives, we see that the Indian economy has been growing at a very impressive rate. The Q3 FY24 GDP surged to 8.4%, which is higher than expectations. This is driven by strong domestic demand, government spending, and obviously manufacturing boom. Typically, in the past too, cement has been at about 1.1 to 1.2 times the GDP growth. So we expect the growth to be strong and stable, absorbing some of the overcapacities in the market. On inflation side, it has been on a downward trend. The CPI obviously was at a 9-month low of 4.9% in March. This is very good news for consumers and businesses. GST collections have been at an all-time high, giving the government more resources to invest, which should be good for our sector. And in the construction sector, the housing and infra, which are the major consumers of cement, are anticipated to continue to drive demand going forward. On challenges, obviously, one of the biggest challenges in the last couple of months has been the election, which has led to some conservatism in consumption. There's also a little bit of shortage of labor, etc. in the market, which has caused a little bit of a dampener in the last couple of months. The global headwinds also could be a challenge. The global slowdown and geopolitical tensions could pose some risks to India's export growth and foreign investments. And obviously, the competition is intensifying. The market is quite fragmented, and it is, as we see going forward, would only result in increased competition and potentially put pressure on cement prices. But obviously, after a period of prices falling, we've always seen sense prevail and the prices to bounce back, so we don't anticipate that this is going to be a very serious issue in the long term. So those are my comments, and I would now like to hand it over back to Vaibhav.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. You may press star and one to ask questions. The first question is from the line of Keshav Lahoti from HDFC Securities. Please go ahead.
Hi. Thank you for the opportunity. So I want to understand more on the clinker debottlenecking, what sort of debottlenecking you are doing. You also have some 0.23 million ton debottlenecking on cement and clinker earlier plan. What is the status of that? And finally on the Gujarat expansion.
No, this clinker debottlenecking project has been started this year, and we are going to get the benefit by first quarter of 2025 calendar year. That's when the project will end. This debottlenecking shall result in an additional cement volume of 200,000 tons per annum. And the project is well on its way, and we don't anticipate any delays in this whatsoever. Does that answer your question?
Yeah, it answers. So earlier we have some 0.3 million ton cement and clinker debottlenecking plan. So is that done in FY24?
No, this is the same debottlenecking project we are talking about.
When you say earlier, when was earlier? The last call?
Last call.
Yeah, when last time you did the call?
At that time, the board had approved it. The project hadn't started. Now the project is started, and it's going to be over by quarter 1 of 2025 calendar year.
Understood.
On Gujarat, the matter is still pretty much in the government's court. We can't move till we receive the EC. So all efforts are on to get the EC. That's where it is right now.
Understood.
The environmental clearance for the project hasn't come as yet.
Understood. What is the fuel cost on kcal basis for Q4, and what is the outlook in the upcoming quarter?
So fuel cost, we consume coal, petcoke, as well as the alternative fuel. And during this quarter, our fuel cost was year-on-year basis almost down by around 30%. And now we can say as compared to March, it is almost flat in the current quarter. And the kilocalorie basis, the coal is around 1.6 rupees kilocalorie per kg of coal.
I think he's asking about fuel mix, coal and petcoke together. So
your question about how much coal or petcoke we are consuming?
So my question is the combined fuel cost on kcal is how much coal and petcoke everything including in Q4, and what is the outlook for Q1 and Q2?
Yes, it
is around 1.8 rupee per kilocalorie is the combined fuel cost. And on the specific point with respect to the current prevailing fuel cost, it's almost flat as compared to March.
Yeah, as of now the outlook is also flat.
Understood. Got it. One last question from my side. How is the plans on merger of Zuari with Heidelberg? When should we expect?
Again, we have been working over it. Still, we are not finding a solution with respect to the stamp duty thing. Although the government has already come out in 2021 with respect to regulatory part of the additional royalty, that problem is over, but this stamp duty calculation, still we are not able to find that, okay, how much will be the payout. So we are working on it, and still on the dark, to find some solution to start the process.
So ideally the right way to see is possibly nothing we should hear on FY25, possibly FY26 might be the year we should look for merger.
You appreciate that this is a kind of merger where it covers around 8 to 10 states in India, and as well as the transfer of the mining permits and the freehold land. And generally we have seen that after filing the merger application, it takes around 12 months by the NCLT, and thereafter then execution of transfer of all the property name of the listed company. So we are right that even if you start the process in the fiscal year 25, it is not going to complete. It takes time, maybe 26 or 27.
Okay, got it. One last small question from my side. Green power mix for FY20.
No, green power.
So there are two things. One is the dependence on the non-grid. So we also purchase some small quantity from the open exchange. So our green power, if we talk about 33% is the pure power which we consume, and thereafter we purchase around 5% from the open exchange. So that is 38% of the full year.
Okay, and for Q4 this number is similar?
Yeah, more or less. Yeah,
more or less similar, yeah.
Understood. Got it. Thank you. That's it from my side.
Thank you. You may press star and then 1 to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thank you, sir. Sir, before asking question, just wanted to understand, I think last call we did in Q1 FY24 and then 2 quarters we did not do the con call and now again we are doing so. Any specific reason and now onwards we will be doing every quarter or it will be a yearly basis?
Well, there is no hard and fast rule like that, but as of now, the thought is that we do it once a year. But if there is a need and if there is something which is substantial and material to announce, we can have it interim too.
Okay, got it. Sir, just to clarify this clinker, when you said it will help to have an extra 2 lakh tons of cement volume. So in terms of the clinker capacity, how much it will increase? And so currently our clinker capacity is 3.1 if I am not wrong.
You are right. So in Damoh our clinker capacity is 3.1 million ton. This debottlenecking project will increase the clinker capacity. We are trying to get the additional clinker capacity approval from the government, and it will increase to clinker capacity to 3.3 million ton or 3.4 million ton.
Okay, got it. And in terms of the overall cost reduction, so when we are saying that our green share will increase to more than 40% versus currently 38%, so how much reduction in terms of the cost we are looking at? And apart from this, any other area where we are looking at in terms of the cost reduction?
Green power, renewable power is around 30-35% cheaper than the green price.
Yeah.
And our target to increase the green power only to optimize the cost as well as to reduce the carbon content in the overall cement production. So at this moment, we are trying to get more and more green power from the developers. And we have already entered into one agreement with the developer for the total 8 plus 8, 16 megawatt green power. And that will start in the current quarter, and you will see the benefit on that account. And to that extent, the power cost will be reduced by around 30-35%.
So if I have to, in terms of the rupees per unit, if I have to look at, so the thermal power is 7.5 rupees, and from there it is 30-35%. That's the way one can look at.
Yeah, that's right.
Okay. Apart from that, any other specific area where we are looking at a cost reduction? So trying to understand in terms of given the pricing are under pressure, so how the profitability can improve.
So you might have also checked in past that we have been putting a lot of capex on our alternative fuel project. We have already done 2 phases of alternative fuel project, and 3rd phase is going on, and that also will aid the slight maybe optimization of our variable cost, as well as it reduce the carbon content in cement.
Okay, and current cement prices are how much lower versus the 4th quarter average for us?
I think on an average we have seen a drop of around 6 rupees per bag.
In April and May?
Yeah, compared to the last quarter you're talking about, right?
Yeah. So in April and May versus the 4th quarter average of 6 rupees drop is there.
Yeah, exactly.
Okay. And sir, if you help us with a couple of data points, though on a yearly basis we are given in the presentation, all this trade share, premium share, road share, lead distance for 4th quarter, and if possible for 3rd quarter, if you can share the same number, trade share, premium, road, lead distance, fuel mix.
I don't have it readily available.
These are very stable. If you see,
these don't change. I mean, we are fundamentally a retail-oriented company, so There is no material change quarter to quarter. I mean, it may change 0.5%, 1% here and there, but there is nothing more than that.
And capex for this year, FY25-20, and next year, if possible, if you can help, what would be the maintenance capex or any other capex?
Mr. Shah, next year our major capex will come on account of this debottlenecking project.
Exactly.
So out of 700 million INR, we expect that in fiscal year 24-25 there will be around 50-55 crore rupees capex will come on this improvement project. And then other than that, around 50 crore rupees in any case, every year we have been doing sustainable capex. So next fiscal year, we can say the total capex will be in the range of 100-120 crore rupees.
This is in FY25 or 26 you are saying?
No, 25.
125 crore capex will be there. Okay, got it. Thank you, sir.
Thank you. You may press star and 1 to ask questions. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yes, sir. Yeah, good afternoon, sir. Thanks for the opportunity. Sir, what kind of volume growth you are anticipating in FY25? Taking into consideration the current demand scenario?
Well, the volume growth should be in the line with industry growth. Remember that today we are almost running at 80% plus capacity utilization, and our debottlenecking is not going to come in before quarter one. So we shall be in line with the industry growth.
So that means
which should be in the region of about 6% to 7%.
6%, 7%. Okay. And sir, what was our lead distance this quarter?
Okay, just give me a moment. Let me find this out. 375 kilometers.
375 kilometers. And sir, fuel mix, if you can provide that, coke and coal together.
We already spoke about fuel, but what do you need? What do you want to know?
You have given kcal cost. I want to know fuel mix during the quarter.
60,
okay.
60 pet coke, 30 coal.
Yeah. So about for the entire year, no? He's talking about.
Only quarter 4.
March quarter. So this is about 20% coal. And 10% AFR. So that's 60% pet coke.
Okay, sir. And that's all from my side, and wish you all the best.
Thank you.
You may press star and 1 to ask questions. The next question is from the line of Raghav Malik from Jefferies. Please go ahead.
Yeah, hi, sir. Thank you for the opportunity. Just 2 questions from my side. So first, on the value-added product, I just wanted to know how much higher is it priced versus our regular product, and what is the share of volumes that we can expect from this, maybe going to FY25?
Well, in terms of pricing, it is anywhere between 50 to 60 rupees higher per bag, but there are also higher inaugural discounts which are connected with this. We are about 8,000 tons right now per month. By the end of 2025, we should be clocking anywhere between 20 to 25,000 tons.
Okay, got it, sir. And sir, just a housekeeping question on geographical mix. Is it still largely central? That's where we get most of our volumes from, central India?
It is UP and NP mostly, yeah.
Okay, thank you, sir.
Thank you. You may press star and 1 to ask questions. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, the Karnataka clinker, Amasandra, that we have officially now said that we have shut down, but the grinding 0.5 million ton we are operating. So, and we are looking at to get the clinker from the reliable sources. So, just trying to understand, have we done the arrangement, and is it a 1-year arrangement, or it is on a spot basis, 1 or 2 month arrangement, and will keep on happening?
I have not understood your question. We are not doing any clinkerization there at all. We are sending clinker from our plants to Amasanda for grinding. That is permanent.
No. So the grinding, from where we are getting the clinker for Karnataka grinding?
We have been sourcing this clinker since 2017 from one of the Zuari plants. And this clinker we are getting from them, and we don't foresee any risk in near future. So that's why we mentioned also reliable source. So there is no dearth of clinker availability for the Amasanda plant.
Okay, I didn't understand your question. Okay. Yeah, so we are sourcing the clinker from our Zuari plants, which are located nearby.
Okay. Got it. And sir, in terms of the staff cost, this quarter has gone up decently on QOQ basis. From third quarter, it was 36 crore, now 45 odd crore. So any specific thing in this quarter, or this run rate likely to continue?
No, this is fundamentally because of distribution of bonuses and variable pay, etc.
And March quarter, this actual value, this reduction of the retirement benefit also comes.
Yeah.
So if you see, Mr. Shah, year-on-year basis, the figure was higher than the December quarter, and on top of that, then the annual increment is there. So every December, March quarter, you will see slightly higher on the account of retirement benefit also.
So roughly, if I have to look at on the run rate quarterly basis from Q1, will it again come back to 41-42 crore? So currently 45 crore for this quarter. So just trying to understand the normal run rate quarterly.
You are right. December, March quarter slightly higher, so June quarter you will see it go back to lower.
Okay, got it. And sir, is it possible to share the KKL cost for the third quarter? 1.8 for fourth quarter you have mentioned, but third quarter, what was the KKL cost? Sorry, sir?
We need to calculate, but it was slightly high. In December quarter, the kilocalorie cost was slightly higher than the March quarter. Around 2 rupees was there in the December quarter.
Okay, got it. And sir, the TSR, when we are saying 10%, so this 10% TSR is for FY24, and also we are saying AFR is 8%. So if you can help me, what's the difference between this?
It is between the quarter and the annual. So in the full year, our TSR for the alternative fuel was 8%. In the March quarter, because gradually we are emptying up, so our AFR consumption has been increasing. So in March quarter alone, it was 10%. So you can assume that the full year was 8%, so there is a gradual increase in the March quarter as well.
Okay, and this will further increase to how much and by when?
Our target to increase the further to alternative fuel, depending upon the cost of the alternative fuel availability in the market.
Sorry, how much to increase to at what level, sir?
We'll see. The main target is to increase it further.
See, alternative fuel in terms of thermal substitution rate today depends a lot on availability, on biomass, etc., on the costs, everything. So if you were to ask me for an exact number, it is difficult to predict. But in terms of our commitment to the environment and reduction of carbon footprint, we would like to go on increasing it subject to availability of AFR.
Okay, and lastly, sir, this environmental clearance for Gujarat expansion. So just broadly trying to understand, at least it will take 6 months, 1 year, or more than 1 year, 2 years. So just trying to understand, even if we, let's say, start, when can the plant can come up? So previously, I think we have said that we are looking at 2 million ton clinker and 3.5 million ton grinding. So will it come in next 2 or 3 years? That is there a possibility even if it comes, let's say, in next 1 month also?
No, we would not like to make a speculative statement. I think this is the ball is purely on the government's court, and it'll take its own time. We are following up, doing all the necessary work from our end, but at this point in time, we are unwilling to put a date to it because it's purely speculation. It only depends on when the final clearance is available from the government. Obviously, from that, putting up can take 3 years' time.
Okay, from that 3 years time. And the plan still remains the same 2 million clinker. In terms of the expansion, the plan remains the same 2 million clinker and 3.5 million ton grinding.
Yes.
Okay. Got it, sir. Thank you.
Thank you.
Thank you. You may press star and one to ask questions. The next question is from the line of Aman Agarwal from Equirus Securities. Please go ahead.
Yes, thank you for the opportunity, sir. And congratulations on a good growth registered in FY2024 on the volume side. So I wanted to understand on the management philosophy with respect to Gujarat plant. So, awaiting the approvals, are we open to maybe look at some outsourced grinding arrangement in the similar region, maybe to create a branding awareness or to increase the channel strength over that region till the plant comes up?
You're talking about Gujarat?
Gujarat market, yes, sir.
No, as of now, there's no such plan to outsource grinding.
Okay, and given that this plant still awaits the clearance, are we also looking at maybe some other region? I'm asking especially as the central region has been increasingly witnessing higher competitive intensity. So since we are already standing on a net cash position, is that something that the management also be going around to look at some other regions to enter into?
No, other what? Are you talking about other geographies?
Other geographies, yes, sir.
Yeah, so, that will purely depend on what's available. I mean, we are open to both organic as well as unorganic growth.
Anything on the drawing board series in terms of newer expansion other than the Gujarat plant?
That is not something that we would like to, declare right now. We'll do it as and when we are ready.
Understood. I just wanted to ask that. Thank you.
Yeah, but we are looking at growth. That's the only that I'm allowed to make at this point in time.
Thank you, sir. Participants, you may press star and one to ask questions. The next question is from the line of Uttam Kumar Srimal from Axis Securities Limited. Please go ahead.
Yeah, sir. Thanks for the opportunity again. Sir, in terms of premium cement, we are already at 34%. So how much more we can trying to go in terms of selling a premium cement?
Premium cement contribution.
Okay. So yeah, as you heard that we've launched a new cement, which is a functionally different cement. So I think our ambition is to reach a number of around 45% in the next 2 years. So that's what we are gunning for.
Okay, sir. That's all from my side. Thanks a lot.
Yeah.
Thank you. You may press star and one to ask questions. Ladies and gentlemen, you may press star and one to ask questions. This will be the final reminder and no further reminders will be given. The next question is from the line of Shravan Shah from Dolat Capital. Please go ahead.
Sir, this quarter in terms of the change in inventory number, that is a 14 odd crore. So in terms of the per ton, actually that number is decently high, 115 odd rupees comes. So that reduces the overall cost and that leads to a higher EBITDA per ton. Just trying to understand, will it kind of normalizes or reverses in the Q1? So and then given the 6 rupees drop in the price, so the Q1 EBITDA per ton likely to be much lower than the fourth quarter number. That's the directionally wanted to understand.
No, we can't interpret this increase or decrease of inventory with the cost of production. This is mix of the clinker and cement which we produce, and that basically is lying in your inventory. So it depends upon that, okay, how much quantity we produce next quarter and how much we are selling in next quarter. But it is not impacting your cost of production at all. So with respect to directionally profitability of the quarter, it depends upon the price in the market and the volume in the market.
Okay. Because just trying to understand, I didn't get the clearly in terms of the how our cost will reduce from now onwards, given the 6 rupees drop in the cement prices. So from the current levels, if one has to understand directionally how the profitability can inch up, because we are only looking at 6-7% kind of a volume growth, no any such major expansion is there. So that's the worry. Just trying to understand.
So generally, we don't give guidance for the quarter or the year.
Okay. Got it. Thank you, sir.
Thank you. This will be the last question for today, which is from the line of Aman Agarwal from Equirus Securities. Please go ahead. Mr. Agarwal, kindly proceed with your question, sir.
Hello, am I audible now?
Yes, sir.
Yeah, this is so just wanted to understand the volumes front for April and May. So we understand that there has been kind of a double-digit degrowth that the central market broader basket has gone through. What's your view on that, and how are you viewing the 1Q volumes for Heidelberg?
No, so as of now, yes, the market is degrown. There is no doubt about it.
Just wanted to understand the gravity of the same, sir.
So the number that you indicated is right. I think the entire industry, all the major players, the degrowth would be in that range. It will be a double-digit degrowth for April and May, but we are looking at an uptick in June post the election dates are over, because there would be a lot of pent-up demand. So June, in our estimation, should be much better.
Okay.
That itself is difficult to.
Sure. Just wanted to understand.
Sorry, you were asking something.
15 to 20% would be the range that April and May degrowth would have been?
I would not be able to comment on what everyone would perform.
No, but on the broader market level, sir.
Well, if I would hazard a guess, it would be in the early double digits. That's all I can tell you right now.
Understood, sir.
Yeah.
Sure. Thank you.
Yeah.
Thank you. As that was the last question for today, I would now like to hand the conference over to Mr. Vaibhav Agarwal for closing comments. Over to you, sir.
Yeah, thank you, Michelle. So just a clarification, did you say on the call that the guidance is about 6 to 7% volume growth for FY25, if I heard it right?
I didn't understand your question. Can you?
On the call, did you say that the guidance for FY25 volume growth is about 6 to 7%?
We have estimated the industry growth of around 6 to 7% volume growth.
Okay. Any guidance for Heidelberg, sir, from a volume perspective for FY25?
No, at this point in time, no.
Okay. And sir, any views on industry consolidation going forward? How do you see the industry consolidating, and especially with players like JK Cement, etc., adding large capacities in your region, or maybe coming up with new lines? So how do you see with any better pricing scenario in the longer term? I'm not asking for the near term, but in the longer term, the pricing scenario getting more stable and better with larger players also coming in a big way in the Central India markets?
Well, that's actually right at this point in time, difficult to predict. But as you know, these always goes through cycles. Whenever there's a new capacity in the market, till the capacity is kind of at least 65-70% used up, there would be pressure on prices. After that, prices typically tend to stabilize. So whether that's a larger player, whether that's a smaller player, it hardly makes any difference.
And any views on consolidation?
I think consolidation is the way to go. I mean, into the future, but it's difficult to put a timeline to it. But some kind of consolidation is bound to happen. Okay. Right. So, and we are also kind of open to evaluate inorganic, because we are sitting on the reasonable cash, I would say. So we are open to evaluate opportunities. Is it fair to say? Yes, absolutely.
Okay. That answers it, sir. Thanks a lot. Thanks a lot for your time on the call. On behalf of Philip Capital India Private Limited, we'd like to thank the manager of Heidelbergcement and also many thanks for my participants for joining the call. Michelle will now conclude the call. Thank you very much, sir. Thank you. Thank you.
Thank you, sir. Thank you, members of
Thank you very much.
Thank you.
Hello.
Thank you, sir. Ladies and gentlemen, on behalf of Philip Capital India Private Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.